Hey everybody, it's Tuesday. We're on the floor of the New York Stock Exchange with Jim Cramer to break down today's market action. Jim, let's start off with the markets. You alluded on Twitter that maybe there's too much negativity out there.
Yeah, I mean, what I'm kind of decrying is the idea that if you think a company's going to do X and it does X plus one, and suddenly you decide the X plus one is not good enough, you're going to sell it down. Now, a lot of this has to do with big runs in stocks ahead of quarters, and those are being repealed. I've been saying, I was telling my wife the other day, she said, what's the matter? I said, they want to roll back a lot of what was put on when the tax code was going to change. I mean, it's not rolling back to where it was pre-President Trump when it looked like Hillary Clinton was going to win, but they are rolling back anything that came from tax code, and a lot of that has to do with the fact that people feel that nothing's really changed. I disagree with that. I think the tax code is very good, but I think a lot of this has just gotten to be that if a stock is run up and it reports a great quarter, that's not enough, because there's going to be a line that people are going to pick at. Now, the cleanest beats are even being challenged. Like I thought, and I did a piece of Real Money, McDonald's beats being challenged, but that was a remarkable quarter. But the reason why McDonald's went up is because people felt that the 1, 2, 3 value package was going to fail. And it didn't, so the shorts had to cover. That's how you get a stock up 9. But I just think that in general, whether it be a Merck, whether it be a Pfizer, whether it be a Seagate, whether it be an Eaton, expectations got too high, and now we're in a period where stocks are going to go down. I just don't want people to get too negative, because if the president, if China blinks, if raw cost inputs go down, if we get a situation where the market gets oversold, we were -1 on the proprietary S&P oscillator that I use, we're going to say, wow, we got too negative. But we haven't got negative enough yet, and that's why the market is down.
Yeah, well, and stocks are holding up pretty nicely. I mean, even with all that negativity.
Well, I'm just saying that if things are so bad, why is the market pretty much even? And you read my stuff, so you know what the essence of what I'm saying, and what I said last night also on Mad Money is, look, it's certainly not perfect, but if it were really, really horrible, all stocks will be down. Now, there are a lot of stocks that are down, and we do have a rotation periodically, but this is an opportunity after the selling, but that's the problem. You have to have the selling first. And the selling is relentless, and there's no floor on any company that misses. And a company that does well, people are looking for a level to get involved, but haven't found one yet.
And we know those tariff deadlines were extended. We'll talk more about that in our Action Alerts Plus call.
Right, I mean, there's an example of suspended animation. Again, we're trying to figure out clarity. And the markets, the president's offering no clarity. Some of the numbers around the world are a little bit soft. The global synchronized rally seems to be coming to an end. We had a lot of soft numbers in March. Now we're beginning to wonder whether we're going to have soft numbers in April. The weather didn't comply in the United States. The market's headed down. But I am, as usual, thinking, okay, at this time next week, we'll have had Warren Buffett say everything's great. We'll have had a good Monday, maybe because of Warren Buffett. And then we'll be saying, oh, geez, we threw a lot of stocks away. Let's take a look at American Express that went up dramatically after it reported. Let's take a look at Walmart, which has decided to really, they said, all right, we're not going to continue to lose money in certain places. I'll look at Ford and say, you know what, they're not losing money in cars anymore. They don't mind to be in trucks. They're making themselves smaller. So there are things that are working, but then there are things that just take your breath away, and I'll talk about some of those in the Action Alerts video.
And when it comes to Cummins, which you covered on your Mad Dash segment, EBITDA as a percentage of sales was down.
Well, Cummins was a lot like Caterpillar. And I think that what's happened is that raw costs are going up. There were some executions issues with Cummins. But they talked about their end markets being strong, and Caterpillar talked about their end markets being strong. And I think that matters. It just doesn't matter right now.
And we've talked about how rising raw costs could lead to stagflation.
Yeah, I think that's what people are going to say. I think a stronger dollar is going to put a little damper on the stagflation theory, and the dollar's now up for the year. If oil were to head down, I do believe that oil is being kept up to some degree by the Aramco deal. The Saudis want oil up, and I say that because if you look at the forward curve for oil, out, say, 4 years, oil's down $18 from where it is right now. So There are some short-term tension reasons. I mean, look, if you pick the paper up and it's talking about Israel, saying that Iran's lying, and Pompeo went to Saudis and Israel and to Jordan, maybe there's going to be something that goes against Iran. The president has made it an uncertain place. I think the president cared more about the stock market as a barometer in his first year. Now he's starting to get some very good poll numbers. He's caring about the poll numbers as a barometer in his second year, and he's deciding that maybe the stock market is not as consequential. I think a lot of his voters don't have a lot of stocks. Very interesting. A lot of the voters for Obama didn't own a lot of stock. So, I mean, the market's going to come down. Apple is conceivably to be a very difficult situation. CommScope today basically said there's weakness with one customer. That's going to be Apple. Broadcom, a lot of price targets cut. That's why we sold it for action alerts. That's going to be Apple. You see a lot of different, you see Seagate down today. The quarter just wasn't good enough. You see Western Digital now going, because that's flash, going from 100 to the 70s. So you have a lot of negative inputs in tech, a lot of negative inputs in healthcare. Look at Merck and Pfizer. They look great on the surface. Pfizer and Merck were up. Then you dig down under the surface and people don't like what they said. Yesterday, Allergan and Action Alerts named down 8. Seems wildly overdone, but then again, I understand that the market doesn't want to go higher. So the negativity keeps building and building and building, and at a certain point, it will get too negative. Maybe the fulcrum will be a bad number from Apple.
And you've been raising cash for Action Alerts Plus.
Yeah, we got a high amount of cash, and I do want to put some of it to work, but I'm incredibly cognizant that I don't like to lose money.
Especially, you talked last night on Mad Money about how people tend to lose money on Mondays.
Yeah, they pay up, and today they're losing money on Tuesdays. We're going to talk about ideas on both long and short side on our boot camp that Scott can speak to, the way to be able to get tickets. It's very, very important to know that we're not just going to be long side. I know I'm going to give you a game plan for 2018, how to handle it, that I've not talked about any other venue. And we've got Tony Dwyer, who's terrific. He's going to do great. I'd say a lot of interesting things. Carly Garner, who's just nailed the commodity so well. Dan Schulman from PayPal, one of our favorite stocks. And why don't you give some of the read-through of what we have to do?
Yes, everyone please go to events.thestreet.com/teachin. Buy a ticket. Jim, they're going to sell out. People need to act fast.
Right, I guess so. Yeah, I mean, I think so, because I have... if you look at Twitter, I've listed a lot of the people who are coming, and you can see that these are people who are all worth listening to. It's going to be really exciting. And of course, pictures with me if you want that. Maybe you don't want that, but if you want it, we can make it happen.
Yes. Also, our own Stephen Guilfoyle will be there, Market Recon.
Is just fantastic. His Market Recon today about Apple is a must-read. You got to read these things because you got to try to figure out, right, why is the market basically in free fall? If you read what Steve is saying, you'll totally get Sarge. What Sarge is saying, you really get it. He's done a remarkable job with his morning. I start my morning with it. It's a terrific report. And I know he starts his morning with real money, which I love that. But he'll be there. Everybody's going to be there. And it's going to be just a great opportunity to learn.
Okay, events.thestreet.com/teachin. Go there. Meanwhile, Jim, we're going to continue talking about stocks.
Yeah.
Join us on actionalertsplus.com.